Alright guys, what do? It's your boy X coming to you guys from another video. In today's video, we're going to go over my dividend portfolio. Why? Because like the market's still falling, but we keep putting the money in. Why we keep putting money in? Because that's how you grow wealth. It doesn't matter if it's up, it doesn't matter if it's down, we continue putting money in. So that's what we're doing, and that's what I'm going to go over with you guys today. So let's get into today's video. Alright guys, so before we hop into the dividend portfolio, you know I gotta ask, would you subscribe to the channel and like this video? Like, even if you don't subscribe to me, I understand, but can you at least like the video? Like just a little bit, just like appreciate it. But yeah, the market is doing what the market does, and in today's time, that's falling. Like big falling. Like not nice. It's not nice, but it's an amazing opportunity if you actually try to utilize it. So I am trying to utilize it, and like I said, I told you guys I would be putting $500 from my paycheck, every single paycheck, into the market. Sometimes I may put a little bit more, but for right now, I'm putting 500. So I started, and yeah, the portfolio of course has not moved because things are going down. But when I say it's a lot of stocks in my portfolio that are down, and it's just like you want to sell your whole house and just throw it into the portfolio. But we're not going to do that. We're not going to do that. But it's a lot of stocks in my portfolio that are down. I just want to go over those with you guys. Right now, of course, crude white LED is down. This is one of my biggest holdings in this portfolio because of the strategy I'm trying to utilize, is where I put the money into crude white LED, a decent amount. And since crude LED has a 10% dividend yield, I'm able to pull a lot every month in dividends, and I use those dividends plus my contributions to start double down and buy all the stocks that are in my portfolio. So as of right now, like, no actual money is getting contributed to crude white LED. It's all the rest of the stocks in the portfolio, but of course crude white LED is also down. So we're down about 3,500 with crude white LED, but truthfully, I'm making about anywhere between 350 and up, depending on where the dividend is for that month. Make about 350 and up in just per dividends from that one stock. So it's about even, so not that bad really. We got VOO is my next biggest down one, which down like significant on that one though. VOO took like the big drop because it's a broad index fund, and no index funds are down. So yeah, taking a hit there. But this is one of the main stocks I'm allocating the most money to. Why? Because it's down, and it's down a significant amount, and it's an index fund. Like, when the market starts to bounce back, whether it's a year from now, whatever the case may be, this would be something that most definitely bounce back because it holds the S&P 500. It's a very good diversified stock. So I'm more likely it will bounce back, and I want to get as many shares of this as possible, so I got the allocation pretty high. Now I did make some I did put some non-dividend investing stocks in that portfolio. Why? Because I just think of the overall growth that company can have in their 5 to 10 years. So I added that in there for that growth. Of course I added Tesla into this, and 2 other stocks that I added I think would do amazing outside of Tesla were Amazon. I do think Amazon will continue to get better as time goes on. Of course, they just did their stock split, so now it's actually a stock that's in my price range, you know what I'm saying? But I do think in time Amazon will continue to grow, so I did add Amazon to the portfolio. And last is my let's call it the big fish play outside of Tesla. It's Riot. If you don't know what Riot is pretty much crypto blockchain. It has to do with Bitcoin. It's a company that does a lot of Bitcoin mining, and of course, due to like the actual fall of the crypto market, this company of course is actually down. But if you actually look at the bread and butter of the actual company, they're actually doing phenomenal. Like, they're doing amazing. Of course, earnings should be coming up, I think next month or something like that. I'll be waiting for that. But the company is actually profitable. It just with the fall of the cryptocurrency market, this stock also fell because it has a lot to do with Bitcoin mining. But if you ever know what Bitcoin mining is, when Bitcoin is low, although it takes longer to mine a coin, you are able to get pretty much a lot more coin just because it's cheaper. So whenever it does do a bounce back, it really does help your portfolio. So I most definitely added Riot to that, my portfolio. These 3 stocks do not pay dividends, but I truly do believe in the next 5 to 10 years, these 3 stocks could be some real bangers in the portfolio. All right, guys, so as you can see from this portfolio right here, like I said, these are the stocks that I'm actually down. It's not a lot, but the only one that really hurts a lot would be QYLED, but that's the one I get the most dividends from, so it really allowed me to actually gobble up them dividends and buy a lot of stocks, because if they pay me out like $350 a month and then I put $500 per paycheck, I'm roughly investing about $1,300 minimum. So, and then like I said, some months I drop like $1,500 in, so it'd be around 18. But as of right now, like I said, that is my biggest down. Like I said, it's down, it's pretty significant, but like I said, it does pay out the most, and it helped me really grow this portfolio. So as you can see, so far I'm looking at, far as from QYLED, I've made $1,384.66 in dividends. Chevron $37.35, OKE $13.26, GPC I got $1.18, PG 26 cents, and Apple I've made 15 cents. So the dividends are coming in pretty nice. Like I've made a total of $1,510.39 in dividends, people. That's pretty sick for me to I think I started the portfolio around February, I think, somewhere around there. But this is as far as we got. Like I said, looking pretty good. I'm hoping to really start to dive into this portfolio. Like I said, we were waiting for the summertime here. It's been really hot. I'm sorry I haven't been posting, but I've really been going in at 8 and getting off at 9. And here in Memphis, we got like one of the hottest summers going. It's been like 100 degrees, like 7 days straight. Heat index is like around 110, 118. There's a lot of people at work tapping out, but only the real ones. I can handle it. And looking pretty nice. So I should be able to start really allocating to the portfolio. I want to allocate so much, but I can't do as much as I want to, because I have to save up for the next house down payment. That is a must. So, but we are most definitely always investing. And why should you do that? Because even if it's falling and you buy, you can always dollar cost average. Don't forget what dollar cost average is. Dollar cost average is when you buy at 150 and then you buy at 140, and with the amount of money you put in, they average it out. So even though you bought initially at 150, your average price that you bought would be lower than that, which means the lower your cost basis, the better. Because when they start to rise up, that means as long as it's above whatever your cost basis is, you're profitable. So right now, let's say my cost basis is 140 and the stock is at 130, I'm down. But let's say I keep buying, I get that cost basis down to literally 135, and then that stock goes back up to 140. That 5%, I'm very profitable. So that's why we keep dollar cost averaging. We always keep investing because I'm a long-term investor. This portfolio is not for me to take money out. It's not for me to pay bills with, nothing. This portfolio is meant to keep adding in so it can grow within itself. So hopefully in 5 to 10 years, I can look at this portfolio and blow my own mind. So if you're interested in starting investing, check out the links in the description. In the description, you'll find M1 Finance, which is the platform I just showed you guys that I'm using. You'll see Robinhood. A lot of people don't like Robinhood. That's crazy. I think, and also down there would be my Public. I do not use Public that much, but I do have like some Apple shares in there. It's pretty nice. They grow almost 2%. Let's get it. But check those links out. Let's see, you sign up with those links, you can get like a little bonus to help you really start your account. I strongly recommend it. I mean, why not take the extra money if you're going to start investing anyway? But if you have any questions, like I said, my Instagram is down there. Send your boy DM, follow me on there also. But yeah, man, the portfolio is looking real nice. Can't wait to really see it hit that 6-figure mark. Hopefully we can get there pretty soon. But do not forget to subscribe to the channel, guys. Most definitely like this video. And it's your boy Exia, and I'm out.